Hi, welcome to Victor Growth. In this class, we are discussing about the 16th Finance Commission report, which has been tabled in the Parliament by the Finance Minister. Okay, so very important document, and the questions in the UPSC always comes from this, either political wise or the recommendation wise. So, 16th Finance Commission, let us get into it. So, 16th Finance Commission report is valid for 5 years, starting from 2026 to 2031. That means 1st April onwards, it will start. Okay, and I need not mention this if you know already. Article 280 of the Constitution provides that Finance Commission of India, constitutional body, every 5 years, once in 5 years, President will appoint the Finance Commission. So this year it is appointed, and not this year, it is appointed 2-3 years before, and they have submitted the report. And who was the chairman of this? That is one simple question they'll ask you. I don't think that nowadays they're asking. Okay, Dr. Arvind Pana Garia. Okay, Arvind Panagaria is a 16th Finance Commission chairman, and it is about upholding, please write down in your notebook, upholding fiscal federalism, okay, or financial federalism. Federalism means the division of power between the central government and the state government. The fiscal federalism actually is not as clear as that of a normal federalism, because in the normal federalism we know that there's a state law, central law, something parliament can do, something state can do. Schedule 7 of the Constitution discusses about the union list, state list and all. Okay. But fiscal federalism, they have not clearly said. Okay. So that is why the Constitution has given an opportunity to correct it by Article 280, in which they are saying there will be a Finance Commission of India which can recommend, what is the main recommendation, how much of resource or the amount or the money can be transferred from the union government to the state government. That is the main recommendation. The main recommendation of Finance Commission is how much of cash can be central government given to the state government. Okay, that is most of you may know this. Okay, and that is known as vertical devolution or vertical stability, you can say. That means how much union can give to the states. So it was 42 years earlier. Okay, and since the Jammu Kashmir has become a union territory, it is not a separate state. 1% has been removed. Now it is a 41. They have retained this 41%. That means out of every 100 rupee union government is getting, okay, 41 rupee have to be given to the all the states together. It's not for single state, all the state together. Okay, so executive dashboard is 4 pillars of the 16th Finance Commission. Okay, one is a vertical devolution. The states from the central tax. Now here you have to understand there are certain taxes which, or certain income which the central government need not share. For example, surcharge is there, cess is there, they will not share. That is a huge money now. Okay, whatever coming as a central tax, that they will share 41% to the states. Okay, this has been no surprise in this. In fact, states need more. They are saying, states are saying let it be 50%. Okay, central have 50%, state have 50%, but that is not accepted. It's only 41%. Okay, they streamlined the grants. Okay, Article 275 of the Constitution. Please write down Article 275 of the Constitution, saying that there can be grants recommended by Finance Commission. Grants means what? It is a free money given to the states based on certain need. Okay, like they are economically backward or they're geographically backward, like that we can give grants. So total grants we have recommended is 9.47 lakh crore. Now something I have to tell you here is Finance Commission is a recommendation body, and their recommendations are not binding on the government. It is not binding on the government. But in this case, the Finance Commissioner herself has said that they are accepting all the recommendation of the Finance Commission. Okay, so Finance Commission is a recommendation body or recommending body, and the recommendation is not binding on the government. That you should write in your notebook properly. Okay, and focus strictly on local bodies. Please write down disaster management. Sector specific grants has been discontinued. Please write down that. Okay, that means the money is given to you, and where you want to spend is up to your autonomy. So a kind of state's fiscal autonomy has been improved, you can say. Okay, I'm giving money to you. Now it's up to you to spend whatever or wherever you want to spend. I am not going for a micromanagement is what this one is. But this is very important. 9.47 lakh crore has been strictly given as a grants. Okay, apart from 41%. Efficiency has to be rewarded. New horizontal devolution. See, vertical devolution means union to state, and horizontal means between the states. which state is getting how much, why they are getting. Okay, so there some kind of efficiency based reward has to be given. Okay, GDP contribution 10% and above, they'll have more fund getting. Okay, structural reforms they are saying. Okay, they are talking about structural reforms. A lot of structural reforms they are recommending, but one thing which is they are saying is DISCOM privatization. DISCOM and distributing companies, that is KCB, like electricity boards. Okay, in Tamil Nadu TB. TNEB, like this, electricity boards, electricity distributing companies, they are saying almost every distributing companies are in loss. Okay, so they are saying we have to privatize. Okay, if you are privatizing, then we can give you more fund also. Okay, so structural reform, one of the major structural reform recommended by Finance Commission is privatization of DISCOMs. Okay, and fiscal, that means that is financial part, strict ban on off-budget borrowing. If you're borrowing, borrow as per the budget document and bring that as a part of the budget. Okay. For example, there was a case in Kerala that they have borrowed for infrastructure and they have used like this. One case is there. If you go and research it. Okay. So like that, we should not do. Okay. You borrow something as per the budget and include in the budget document. Okay. These are the dashboard or important concept which we are going to learn. Okay. Now, who are the people behind this? Already I told you, Aravind Panagaria is a chairman. Okay, of the he was a former vice. This kind of question they'll ask you. Okay, before he becoming the chairman of 16th Finance Commission, what he was doing? He was a vice chairman of Niti Aayog, and then A.N. Jha, Annie George Matthew, Soumya Kanti Josh, Niranjan Raja Deaksha. Okay, not very important. If you don't remember these names, no issues at all. At least remember the Aravind Panagaria. Okay, so it is constituted as per the Article 280 of the Constitution. I already told you. It is a quasi-judicial body. This I did not tell you. Please write down. It is a quasi-judicial body. Why quasi-judicial body? Because they are deciding like how much money the state should get, how much money the union government should retain, and for what purpose they can use. So the kind of judgmental they are doing, so it's a quasi judicial body, and they are recommendation mainly for tax distribution. Okay, here they have recommended 41% tax distribution. They also discuss the principle for the grants, for what purpose we can give the grants. That also I told you, Article 275 gives that power. Okay, then also talking about fiscal discipline. Fiscal discipline is too much waste spending you should not do. Too much of revenue deficit should not be there. Too much of borrowing should not be there. Fiscal discipline should be there. Those are things there. So the recommendation is, I told you, for 5 years. Any finance commission recommendation is for 5 years. So in this case, from 2026 to 2031, we are going to implement this recommendation. And before this 2031 is coming, they will be adding one more finance commission. 17th finance commission will come, and they will recommend from 2031 to 2036. Like this, it goes on. So once in 5 years, appointed by the president. And if you want to go and read the finance commission in the Lakshmikant, you want me to make a video on the finance commission, please let me know in the comment section. I'll make one and we can learn that as well. Okay, so these are the people behind this report. Okay, vertical devolution means what? From the union government to state government, how many coming? So union government will retain 59% of the total tax and 41% will be given to the states. Okay, now this is only for the divisible pool. There are certain things which is not divisible. I already told you, surcharges. Okay, not divisible. Cess, not just divisible. That and all the central government will have it on their own. They will not divide it. So, divisible pool, what is coming as a net central tax, underline that word. Okay, and their recommendation was already 15th Finance Commission has recommended 41%. That has been retained. But before that, it was 42%. I told you, like this one, Jammu Kashmir, Ladakh, and all part of one particular state. When they become union territory, that 1% is removed. Okay, and prevents reduction in the state revenues, acknowledging central rising liabilities. Okay, so they wanted 50%. No, okay, so they said 50% not possible. They are spending too much on the defense and all. Well, you do not have any defense expenditure, so they have to have 59%. Okay. Now look at this. Okay, divisible pool. Okay, all this gross tax revenue, cess. Okay, this and all will not be a part of it. Okay, so in this I told you already, cess and surcharge remained outside this one, and that has become a huge money for the government. Central government will keep that money. Okay, now horizontal devolution. Okay, so if a state wants some money, okay, what are the criteria they should have? Income distance they should have. Okay, and that has been reduced. Please copy down this from 45 to 42.5. Okay, so income distance has been reduced little bit. Okay, population, if there is an increase in the population, that has been increased. Okay, so population is increasing, the grants is also increasing. Democratic performance, okay, that is had been reduced. Okay, then forest and ecology, it's same, but the scope of forest, that from open forest, they have definition has changed. Okay, then the area of the state, that has all, that means it's not like if your state is bigger, you will get a higher grant, that has been reduced. So this comparison can be one question. So 15%, Rajasthan will get more because it is a largest state in India, not necessarily be now. Okay, tax effort, how much tax they are getting, how much tax they are putting, that was 2.5. So this time totally they have been removed in this. Okay, so contribution to the GDP, instead of contribution to GDP, 10%, and new entry has been added. This can be a prelims level question. Okay, what is the new criteria added by the 16th Finance Commission for the horizontal distribution or devolution? We can say contribution to GDP, they have given weightage of 10%. Okay, so income distance has been reduced. Okay, efficiency, GDP contribution has been increased. Okay, these are the criteria. This can be definitely a prelims question. Okay, what are the criteria are existing, or which criteria have been increased, which criteria they have reduced, what is the new criteria they have introduced, all this. So this is the prelims material in front of you now. Okay, now shifting from this one, like equity based to efficiency based. Okay, new efficiency vector has been introduced. What is that? This I told you. If you're contributing to the GDP for 10%, then you will have a higher distribution of this one. Forest and ecology, I told you, it remains 10% only. But what they have done, the definition of forest, okay, the expanded beyond a dense forest to include open forest. Please write down this. Open forest they have included in the growth of forest cover. Okay, thereby, if you are conserving or if you are planting, afforestation is happening in your state, then you may have higher grants also. Okay, so green incentives, you can say. The people factor, that means I already told you the population is increasing. It was earlier 15%, it has been increased to 17.1%. But demographic performance, if you are using, that means you are able to control the population. A little bit reduction has there. Okay. Democratic performance, which is 10%. Previously, we used to have total fertility rate as a criteria. Okay, and now we are talking about the long-term population control. You have done, then they'll have a 10%. Okay, so this criteria and this is a explanation. Okay, now streamlining the transfer. Now, what happens? Already told you, fiscal autonomy is there now compared to previous Finance Commission. Okay, what is that? Of the 9.47 lakh crore as a grant given, okay, and 7.91 will go to the local bodies. Please copy down this. Okay, 7.91 lakh crores to the local bodies, and disaster management will give 1.55 lakh crore. Okay, now inside this, how much you are using for what purpose, we are not this one. So discontinued to enhance the financial for fiscal autonomy. Okay, they can decide what they want to use or where they want to use. Okay, so micromanagement is gone. Fiscal autonomy of the state has been improved in the 16th Finance Commission recommendation. Okay, now empowering the grassroots, that means local bodies. Okay, rural areas getting more fund. Okay, that is surprising, but it is the fact. Okay, among the 7 point, this year we saw no 7.91 lakh. In that, there's a two division. One is the urban bodies and the local bodies. Urban, these numbers are important. Normally, numbers are not asked, but if you know these numbers, your answer writing can be improved in the mains level. Okay, so urban bodies get 3.56 lakh crore, whereas rural bodies get 4.35 lakh crore. Okay, now 80% is a basic grant. Okay, 50% is strict to sanitation and water facility. 20% is based on the performance also. Okay, so it will be audited accounts. So there's a performance based will be there. Okay, a new urban incentives. Please write down this special infrastructure grant of 56,000 crore has been given for water management. Okay, urbanization premium is also for 10,000 crore. These are one-time grant. Okay, so this also note down. New initiative has been taken in the urban areas. Okay, now this is recommended from the Union Finance Commission. Now we have something called State Finance Commission. Okay, so State Finance Commission will see that how much states can give to the local. Now that is based on this one. Understood? So the role of State Finance Commission is also partially done by the Central Finance Commission. Okay, disaster risk financing. Now this is very important. Okay, disaster risk is there. For example, in fact, they should give here Western Ghats also equally having disaster landslides that are happening. Okay, but they have not given like this. So they have mainly concentrated on the Himalayan states. Okay, Himalayan states and northeastern state. 90% will be coming from the central government. Only 10% comes from the states. In other states, please write down other states. 75% comes from the central government and only 25 from the states. So this is one strategic focus is there. Okay, so this 1.55 lakh crore will be going to the SDRF. Okay, and more importantly, this is very important. Normally, what happens is when the disaster struck, people like landslide is there, earthquake is there. Earthquake cannot do anything. Okay, so whenever disaster struck, relief measures only then. That was a very main focus area. But now we are saying that try to prevent this. Okay, let us mitigate it. Okay, how to live along with it. Okay, so mitigation will be given more focus. Okay, please write down this. The financing focusing is shifting from the relief to mitigation. Relief to mitigation. The focus is changing. Okay, now fiscal roadmap, which is actually divergence I see, because in the budget and all or economic survey, they are saying 50% during this time. They are saying 73 only. They are saying okay. So debt to the GDP is going to be reduced, or they are saying a path to reduce it. Okay, and very important, I already told you now, off-budget borrowing should be continued. Okay, off-budget borrowing should be completely discontinued. They are saying okay, and state fiscal deficit should be capped at 3%, and central fiscal deficit should be capped at 3.5%. I don't think this is not possible, but anyway, they are recommending it. If they are doing, then fiscal roadmap, fiscal prudence, they'll say, fiscal discipline, they'll say, fiscal consolidation, they'll say, all these are having same meaning. That means the deficit has to be reduced, borrowing should be reduced. Okay, so this one, not very important, because this is just a recommendation. What is the budget? And budget is not even economic survey. Budget is saying 50%. Okay, structural reform, they are saying, particularly in the power sector, they are saying privatization of DISCOM. That means the distributing companies, electricity board should be privatized. Okay, and there should be special purpose vehicle created. Okay, and only when you make a privatization of this DISCOM, the fund will be given. Okay, states can access, please copy down this, states can access capital investment fund only after verified privatization progress in the DISCOM. Okay, this is a long pending. Every government last, I think 20 years, they are trying to do this. This is not happening. Let us see if this can happen. Okay, now cutting the fat. What is cutting the fat is, see, there are a lot of PSUs which is not performing. Okay, they're simply for the name of it's there. Okay, so they have given a public sector undertaking. Actually, these are not their jobs. They should come under the CAG, but still they are saying 308 inactive state PSCs are there. Okay. Public sector undertaking by the state government. Okay, so they are bringing a new rule. This can be a prelims question. Okay, 3 of 4 rule. Please write down this 3 of 4 rule. What does this 3 of 4 rule means? Okay, any public sector enterprises with the losses in 3 years. Okay, losses in 3 for last 4 years. Okay, definitely the government has to decide on that. Okay, that is what they have losses in out of 3 in the last 4. That means out of 4 years, 3 years they have lost. Then they have to privatize it or close it. They're saying close it. No need for that public sector. Okay. Subsidy reform, they are saying. Now, this is very important. Okay. We talk about social inclusion. We talk about social justice. But there's a lot of leakages. Please write down. Leakages in economic survey, they are saying leakages has been fixed. Okay, they brought this in biometric. They bought DBT. This and all, reducing the leakages in subsidy. In fact, subsidy itself should also be reduced because it's a revenue expenditure. When the revenue expenditure is becoming higher and higher, it is a burden on the government. Okay, so subsidy reform, they are saying that move away from unconditional cash transfer. Okay, this is basically, you might have seen this 10,000 rupees given to women in Bihar before the election. That is what they are saying. So there should not be any unconditional cash transfer. You should give some condition, they should follow, then you transfer the money. Okay, strict exclusion criteria. Okay, for example, anybody's income is more than this much percentage, should be included. So people want to be excluded from this. Discontinue financing subsidy of budget. This I told you already. Okay, adopt uniform accounting standards. Okay, this is very important. So please copy down. There are 4 reforms they are suggesting. One is don't give any unconditional subsidy or cash. Exclude conditions should be there. There are people from this background should be excluded. Wealthy people or ultra-rich people, they'll be still getting the subsidies, which is not needed. Okay. Discontinue finance of the budget. Adopt a uniform accounting system in entire India. Okay. Critical challenges also they are talking about. Okay. Urban fiscal gap is there. Okay. They're saying that because of rapid urbanization, we need 840 billion rupees we need. Okay, which is actually insufficient, not possible. Okay, regional disparity they are saying. Okay, regional disparity means what? Okay, you might have seen a lot of places like I think Maharashtra, Tamil Nadu and all will complain. Okay, we are giving 5 rupees, we are giving 10 rupees to the central government as a tax collection, but in return we are getting 1 rupee only. Okay, whereas Uttar Pradesh is there, which is giving only 1 rupee, but they'll get 3 rupee as a grants. Okay, so there's a tension between the contributing states like Maharashtra, Tamil Nadu, on versus the dependent states, Uttar Pradesh, Bihar, and all dependent states. They are not able to contribute tax. Okay, vertical imbalances we can see. States manage. Now this is also we are saying. Okay, see, state government is given less money, but they have a higher responsibility. So there is another tension. So these are again mains material you can say. Okay, we are going for urbanization. We are going 840 billion. This number is okay. You can use in your mains writing. Then there's a tension between the contributors and the dependent states. Then vertical imbalances is there. For example, the states have to take care of the health. The policing we have to take care. Okay, but central is holding a lot of tax. They are not giving the money to the states. So these are the tensions. There's no perfect solution immediately, but the recognizing that there are tensions available, the 16th Finance Commission has done a very good job, but they're not giving solution. They're just understanding and recognizing, acknowledging that there are tensions available in this area. Okay, so summary is what? Okay, old paradigm of TFR, the total fertility, has been discontinued. They got a population management they have done. Okay, and then off budgeting you should discontinue. Only on budget you have to do. Okay, tax effort they have zeroed, and there's a contribution to GDP 10% weightage has been given. Okay, sector specific grants has been removed, and they said unified, streamlined things. Okay, so roadmap to 2031. This one you can take for your either for interview level speaking or in general speaking in any other place, or even writing for means reform, perform, and transform. Okay, the 16th Finance Commission establishes a framework that balances national stability. Okay, 41% evolution and state performance, GDP incentives, and 10% I told you. Okay, so stability and one pillar and efficiency another pillar. Okay. So the verdict is success depends on states adopting the new ethos. What is the new ethos? New recommendation. Discoms should be privatized. Okay. Fiscal autonomy is now linked to fiscal responsibility. Okay. So with that, we are winding up this session. Okay. See you in another class. Thank you very much. Bye-bye.